throughout the day. We assume there are newer members of trading demo accounts, so regardless of whether or not their personal trading plan is successful, they will certainly have an opportunity to learn and eventually trade their live accounts for years to come, both profitably and independently. Please remember that trading is risky, especially when we're leveraged as we are trading the EMI futures. This amount of leverage can work for you and will also work against you. As an novice trader, do not trade real money of a proven track record on a demo account. All right, guys, good morning. We went into our non-farm unemployment change here this morning, and the forecast was for 65,000. It came back at 115,000. That is the number of employed people during the previous month, better than expected. The unemployment rate was expected at 4.3%, and it held at 4.3%. 10 o'clock, we have preliminary University of Michigan consumer sentiment, inflation expectations, and then wholesale inventories. And as we move forward into the day, note here that Goolsbee has been moved forward to 11:05 a.m., and then Trump is speaking at 12 o'clock. I do not know the details of that speech, but it can create volatility. The Fed rate hike was on the table, out in the future, way out into the future, but right now there's still no cut either, and so we're just paused right into December of 2027. After the close on Monday, our regime tracker started moving towards the boom, and it has been in that direction all week until yesterday's close, where it stalled. So it didn't move anywhere closer into that direction. So it just stopped going into the boom direction. And I find that fascinating, considering that we essentially had completed all of our targets. There's nowhere really left to go that doesn't mean that's bearish. It just means that we don't have an extension long level in play yet. And we were speculating about whether we had traded the new 38.2% line of our extension long levels here. It's a very large front run, one of the largest that we've seen inside of our series. We were also speculating as we were going into our morning, when we ran into these previous highs, would the failed breakout at highs lead us to below the 20 handle by the time that the bell rang? And the 20 handle here is the 84.25. Now, what would it mean here if we opened up at 9:30 above that 84.25? In gap fill statistics, it would mean there's only a 56% probability of filling the gap today in price. Now, over the last 30 days, we've only filled 20% of our gap fills on Friday. You can even see that there's the half gap fills. This is a very unusual number here. And it's just from the perspective of the last 37 days, we have just been going straight up for the most part. We've had multiple consecutive pro gap and go days inside of this rally. And as we're looking at the unfilled pro gaps up versus down, 75% of those unfilled gaps that have been left have been gap up situations. And so, we're rightfully, we should be very cautious of the gap up scenarios like this that we're in, because the markets have this tendency of just ripping away and continuing to rally. Now, back to the regime tracker, this stall that we have. So all week it's been pointed towards boom, in the direction of boom, until yesterday's close. And, if we have a 50-50 event or less for the gap fill, it's still a 50-50. It's a 50. This stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.